What's going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I had to really think about this. I sold Medifast and I bought JP Morgan instead. Medifast appeared to be going on the downtrend. These issues with Ozempic and all these other medications that are out for weight loss have affected Medifast. Their sales have gone down. And I needed a showstopper. I needed a big-time dividend stock. And there's a phrase, big-time players make big-time plays. That is JP Morgan. I am so glad that I rebought them. I'm going to go over a few reasons why I love them. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this dividend stock out right now. So JP Morgan Chase is sitting at 153.71. In the past 5 years, it has not done well against the S&P 500. The past 5 years, it was up 38.23%. The S&P 500 was up 65.39%. They have a dividend yield of 2.73%, a PE ratio of 9.17. The average volume is 8.94 million. The market cap is $446.64 billion US dollars. Year range is 123.71 to 159.38. Day range is 152.72 to 153.87. Previous close is 153.19. So right there in the past 5 years being down, it was slightly beating the S&P before the pandemic really hit, and boom, they have not recovered since. Since inception, they have not done well against the S&P 500 as well. So they've been up 1,383.59% to the S&P 2,659.49. So the S&P is starting to take off and beat them. So that's one thing. Again, they're a little bit down, and I'm capitalizing. There's a few more things. I want to go over their revenue trends, which is extremely attractive for me to buy. I was very close to rebuying Target, but I'm like, no. Their revenue trends are better than Target. They're making money, and they hike their dividend. So we're going to go over their revenue trends. So I'm going to start in 2018. This is annually in millions US dollars. 129,824, 2019, 142,515, 2020, I'm going to blame the pandemic at 129,911, 2021, 127,202, and then 2022, it jumped up to 154,792. This is annually in millions US dollars. I'll confirm that per macro trends right here. Millions of US dollars, okay? Annual data, millions of US dollars. So that is extremely attractive. The other thing I'm going to go over are their recent revenue trends as well. So we got yearly reports. Now let's check out quarterly. So I'm going to go over just a few basics. So the revenue in September 2022, this is quarterly, 31.18 billion. It was up 0.02%. Operating expense ratio, 19.13 billion. That was up 12.62. Net income was down 16.69% with a $9.74 billion. Net profit margin was down negative 16.70%. That's September 2022. Net profit margin was 31.23. Earnings per share was 3.12. That was down 12.11%. December, everything went up. December 2022, the revenue was 32.26 billion. That was up year to year 5.64%. Operating expense was 19.00 billion. That was up 7.05%. Net income was up 5.86%. That was 11.01 billion. I'm seeing billion, B as in billion. That's huge. Net profit margin 34.12. That was up 0.21%. Earnings per share 3.57. That was up 7.21%. March 2023. Revenue was up. It was at 36.07. This is quarterly, billion. Year-to-year change, that was up 23.31%. Operating expense, 19.93 billion. That was up 4.50%. Net income, 12.62 billion. That was up 52.40%. Net profit margin, that was at 34.99. That was up 23.60%. Earnings per share, 4.10. That was up 55.89%. Now we're going to jump to June. Revenue, $35.71 billion. The year-to-year change 20.58%. Operating expenses $20.40 billion. That was up 9.24%. We're seeing all positives. This is good. Net income $14.47 billion. That was up 67.33%. Net profit margin 40.53. That was up 38.75%. Earnings per share was up 72.10%. It was at 4.75. And then in September 2023, earnings per share was at 4.33. That was up 38.78%. Net profit margin was 34.26. That was up 9.70%. Net income was at $13.15 billion. That was up 35.06%. Operating expenses at $21.09 billion. That was up 10.25%. Revenue was at $38.39 billion. That was up 23.13%. So you're seeing things in the positive. That is very strong. That is what attracted me to them. Remember, they have a lot of credit cards. Anytime you swipe your credit card, they get money. So that's one thing that helps them out a lot. Being a financial company is their credit cards. They make money from you swiping your credit card. So just remember that. JP Morgan has some very good credit cards out there. Now let's jump to the dividend history. Remember, you don't want to always chase yield. That's never a good thing. It can blow up in your face. But you better do your due diligence if you're going to chase high yield stocks. So 2011, it's quarterly dividend. 25 cents. 2012, it jumped to 30 cents. And it was a little stagnant in 2012, 2013. Then 2013, it jumped to 38 cents. 2014, it jumped to 40 cents. 2015, it jumped to 44 cents. 2016, it jumped to 48 cents. 2017, it jumped to 50 cents to 56 cents. 2018, it jumped to 80 cents. 2019, it jumped to 90 cents. And then in 2021, it jumped to $1. And then in 2023, it just cracked to 105. So the dividend growth in 5 years is 5.45%. Number of dividend increases in the last 5 years is 3. Their payout ratio is 24% according to Zacks. So dividend yield is 2.74%. That's not bad. I like the 3 to 5% range, but that's still pretty good. And their dividend growth 5.45%. So if you bought one share, you made $4.20. So I had to go after a big time player in my dividend portfolio. And this is one, again, the phrase big time players make big time plays. This is why I bought them. I feel very confident in them, and I'm going to continue to buy more shares. I'm buying shares tomorrow, so I'm just letting you know. Sold MetaFast for them. Feel very good about that decision. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to jump to my disclaimer, and I'll have a video for you tomorrow. Take care. So as a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. Investing is a risk. You have to do your due diligence. It is best to seek financial advice from a financial advisor. What I mean by risk with investing, you can gain money, you can lose money. So make sure you do your due diligence. Make sure you use your smarts. Again, somebody certified to give financial advice or somebody that is a financial advisor, it is best to get financial advice from them. You take care and have a great Tuesday.